welcome to the Airline Weekly Lounge. I'm your host, Edward Russell, and I'm joined by my co-host, Jay Shabat, to discuss Delta's third quarter earnings and Virgin Australia's first year in the black after more than a decade. Also, if you're attending World Routes next week in Istanbul, please say hi. I'll be there covering the event for Skift and Airline Weekly. Now, on with the show. Enjoy. Thank you. We are recording this on the first day of airline third quarter results. We have Delta Airlines just came in and they had some solid numbers. They met expectations. They reported an adjusted operating margin of 13.5%. Total revenues were up 13% year over year to about 14.6 billion. So, solid numbers from Delta. Another profit for the quarter as we expected.
Yeah, and I'll read some numbers, a few more numbers for all of you, if you'll oblige me. Just so everybody is aware, we are speaking, as Ned mentioned, it's Thursday morning. Delta has just released its results. We have not heard the conference call starts in a little bit, so we will have we'll have a lot more information in another hour or so from when we're speaking. But for now, we know that, as Ned mentioned, operating margin was I think they said 13.5 adjusted. I have 12.7 only because they exclude their revenue from their refining operation. So, pick whether or not you want to include or exclude that, but we'll call it 13%. Important fact here is that they pay $2.78 on average per gallon for fuel, and that compares last year to $3.53. So big. That's a big, very important fact there, that they paid a lot less for fuel this third quarter, this summer, than they did last.
And that's even with fuel prices going up in the third quarter, so that's good.
Yeah, and fuel prices, you're right, they started moving up from levels that were quite a bit down from a year ago. And by September, they started getting a little bit uncomfortable again. But for the most of the quarter, I think, as these numbers suggest, fuel was pretty in a pretty comfortable, manageable position. Just so you know, so that 13% operating margin compares to 16% in the same quarter of 2019. So they did a little bit better before the pandemic. It is up from 11% in last year's third quarter. So not doing as well as they were in 2019, but they are doing better this year and last. And I think fuel has a big explanatory factor there. We it looked like all in all, they said that they were going to mid-September. They said that they were going to come in at 13%, and that's what they did. So there you have it.
Yeah. So Delta definitely hit numbers. Another thing that jumped out at me was the domestic side. We've talked a lot about how domestic demand appears to be weakening, and I think Delta's numbers show that. They said, RASM is down 4% on an 11% capacity increase. This was, of course, system-wide, offset by international. But, it still shows that there's a lot of domestic capacity coming in, and that's pressuring yields. Now, of course, Delta's release did say that domestic demand is steady. But, again, more capacity means yields go down, and we're seeing that. And, it's definitely pushing yields down as airlines come back, because Delta increased 11% year over year.
Yes, and steady, quote unquote, is a less bullish adjective than some of the others they've been using earlier in the year. So I think what you said exactly true. Now, there was this about domestic. There was this big mystery in mid-September when Spirit and Frontier basically came out and said, the world is falling apart, and the demand is looking bad, and capacity is situation is bad, and our costs are going up, and our operations are a mess, and this and that, but yet everybody else was kind of saying, oh no, things look pretty good. So this quarterly earnings season is going to go a long way towards sort of reconciling that big disparity between those messages. And I think we could already see some answers here in the Delta press release that they put out this morning. As you mentioned, Ned, I think domestic is definitely I don't think there's any evidence that it's bad per se, but
Right.
we'll use Delta's words. Steady. Is that the word was that the literal word that they use? Yes, it was steady. I'm looking
Yes,
at it now.
yes.
Yeah, steady.
Yeah.
So we'll call it steady. No,
Oh,
obviously,
and to be clear, we've been saying this for a while. Like domestic demand it is a slowdown compared to the, heady growth we had last year, but steady is still good. Like that is still strong. A lot of people are flying. And if airlines weren't growing as fast as they are, steady would be quite good, actually. It's just we got
yeah,
so much capacity coming back into the market.
right. Now, what we'll hopefully we'll learn a little bit more, later today, and then as other airlines report, we'll get a better picture of, what within domestic is doing well and not doing so well. Now, what they did say is that corporate is continues to improve, and that's that could be international or domestic, but presumably a lot of domestic corporate is doing well. Now, that's something that Spirit and Frontier don't have. They don't have the
Right.
corporate. They don't have the premium. And in fact, if you look at Delta, they do break out their premium numbers, and their premium revenues were up quite a bit more. I'm kind of looking for the numbers, but doesn't really matter. There it is. So their premium revenue is up 17%. Their main cabin revenue is up only 12%. So clearly, that's a part of their business that's doing very well that Spirit and Frontier don't have. And then, of course, there's the international. Transatlantic appears to be still going gangbusters. They said that strong demand continues into the fall, which is usually a period of the year when it falls off, but looks still great. And so they have just extraordinary revenue gains on the international front. Again, that's something Spirit and Frontier don't have. I mean, they have
Right.
international, but it's short haul. It's to the
Right.
Caribbean or whatever. So yeah, I think that we're starting to sort of get a better picture of kind of where the strengths and weaknesses are.
Right. The weakness appears really to be in the price sensitive lower end of the market. That could, be a forewarning of greater economic concerns ahead. But the truth is, Delta positions itself as a premium airline, and they are definitely profiting from that. Like you said, premium revenues continue to be up. I did a quick percentage, and premium revenue makes up 39% of all of their passenger revenue, whereas economy or main cabin is 50%. So it's creeping up a lot closer to economy, and that's huge, and that really fits with Delta's positioning and how in the market.
Yeah, and I think as we've said before in earlier podcasts that Delta and I think this is true to an extent for United and even American, they want to sell BMWs, they don't want to sell Hondas anymore.
Yes.
They are becoming more of a premium airline now. Once or one thing that we all have to keep our eyes on is the economy, the health of the U.S. economy, which has performed a lot better than people expected, and particularly on the travel, leisure experiences, side. So airlines have benefited a lot from that. Does that, continue to hold up? The Wall Street Journal had a really interesting article I encourage everyone to read because I think it has a lot of very insightful about sort of how the economy works in 2023, which might have been different the way it worked in 10, 15, 20 years ago, is that we have a large percentage, an increasing percentage of the population that's in that retirement age, call it post 65 years. And that cohort is representing just a larger and larger percentage of overall spending. And, retired people have free time. They can do more travel. So even aside from some of the more flexibility that the working age population has because of remote working and all the, things that happened since the pandemic, there's that, but there's also the fact that just a lot of Americans are retired, and they seem to want to travel, which is it's definitely a tailwind for airlines.
Absolutely. We will, listeners, put a link to that Wall Street Journal article in with the podcast notes. Oh, one thing that I wanted to get your thoughts on, Jay, is if we look at Delta's international breakdown. I mean, international is overall very strong, led by transatlantic, but I was curious that we saw a 3% or 1% decrease. No, 3%, sorry, reading the right line, decrease in Pacific unit revenues, which is odd because we have been talking about how Pacific seems to be the area that is coming back. Demand is coming back the most at this time because it's mostly been closed. Now, that could just because, well, capacity was up 70%. So I would actually, a 3% unit revenue decrease on 70% capacity increase is actually probably pretty good.
I wouldn't consider that a negative at all. That's just a situation of where just all this capacity got restored, and so your average fares are going to be. I mean, the only people who were flying to China, last year were people that like absolutely had to go because it was basically a closed market. So
and it didn't mind quarantining for what, a week, 10 days, something like that. Yeah,
exactly. So they were paying. These are people that were paying extraordinarily high yields. Where now that's kind of more evened out. So I think the Pacific, and they'll, hopefully they'll shed some more insight during the call in a little bit. But but I think I think Asia Pacific has been very strong for them.
Yeah.
I have to believe there's been a lot of pent up demand.
Right.
And then remember too, there's a lot of on a route like China, there's a lot less competition too. Just the market has been restricted capacity wise, so the yields are getting help from that. See, in fact, yields were actually up 70% capacity increase, but yields were up. Unit revenues were down.
This is true. Yields are up 2%.
Yep. Yeah, up 2%. So so I think that's a good story. And even it looks like I'm just glancing at number here. I mean, certainly we know that Europe, or what they call the transatlantic, I believe they include India, maybe the Middle East in that as well. And Middle East, but by the way, that's another thing that we'll be listening for if there's any, the recent events in the Middle East, whether that has any, impact on their outlook. But overall, Atlantic looks great, and Latin America numbers looked good too. The yields down a bit, but on much more capacity. So,
right,
pretty much good news story.
Right. Yeah. So, listeners, we will drop a link to our coverage of Delta's earnings in the podcast notes, so you can read more on what they say during their call. And with that, we'll be right back after a quick break. And we're back. So speaking of profits, we're going to head down under and talk about Virgin Australia. They have, it's an interesting airline. They for years lost money as they tried to go up market. I believe you told me 11 years, Jay. And they finally turned a profit after a dramatic restructuring that has seen them go from attempting to be Australia's second global airline to a single fleet, mostly domestic narrow body airline. And they made a small operating margin, 9%, during the fiscal year ending in June. Jay, what did you find out about Virgin Australia?
Yeah, pretty good, 9%. That was fiscal year ending in June. So that was this is basically the first time they kind of disclosed the results since entering bankruptcy, which they did right after the pandemic hit in 2020. Give you a very brief history of Virgin Australia, which we started out as Virgin Blue in around 2000. And they sort of got out very, very early. They became very profitable, very high margin airline in their early years, call it their first 5 years. And then they kind of experienced what I like to call the WestJet problem. So Canada and Australia are like, it's amazing how many parallels those two markets have. I mean, similar size population and, long distances geographically in terms of routes. And I mean, I can go on and on.
Lack of ground transportation.
Yes, largely duopolistic market with, one big kind of global player and then one low cost. So Virgin Australia, much like WestJet, started out very profitable. They quickly ran into growth issues though. Like, where do we grow from here? There's only so many markets within Australia that work for us. So, we need to, it's sort of a cardinal rule in the airline industry is like, you got to keep growing in order to keep your unit costs down because you're going to experience, labor cost inflation over time and inflation and other things over time. So you got to kind of keep growing, get your unit costs down. But where do you grow? And so their answer was, okay, let's go into, regional flying, and let's go into, let's fly 777s to California, and let's start entering the premium space and go after premium. And before long, they became such a complicated airline, and everything they did, just Qantas just beat them. It was like everything they outmaneuvered them, outperformed them, and like you mentioned, Virgin wound up losing money for 11 straight years. At one point, they were just just constantly looking for money all the time to keep their operation going, and so they sold stakes in Air New Zealand, and Singapore Airlines owned a big chunk of them, and Hainan Airlines owned a big chunk of them, and Etihad owned a big chunk of them, and then finally this whole kind of a mess of an airline just fell apart, as I mentioned in early 2020. Then an American private equity firm came in, Bain Capital, came in, bought control. Yeah, I think Virgin Group still holds about 5%. And they did what airlines do in bankruptcy. They slashed costs, they simplified their operations. They're now pretty much doing just 737s. I think they still have a few A320s and F100s left over, but
I have a feeling that those are doing a lot of the what is the model in Australia? There's it's basically charter market, but hired by mineral and oil companies to help get travelers to and from their destinations, and that can be a very lucrative business. But I think that's where the F100s and A320s fly at this point. So
exactly,
sideline from their their standard passenger operation, but they're still there. Yes.
Right. They did stay in that mining charter business. Australia is like this huge, natural resource economy with, again, just like Canada, has a lot of natural resources in the western part of the country. And a lot of miners need to fly out from these remote places and stuff. So they use these old depreciated planes like F100s, but largely a 737 airline. And they seem to be doing well. They're still, kind of position themselves as a semi-premium type airline, premium leisure or whatever you want to call it.
If we're looking to a U.S. comparison, I'd almost liken them to a JetBlue. They're very JetBlue or Alaska, very very sort of comparable carrier, in the market and stuff. I do wonder, did they mention when you looked at the results any benefit from the reputational issues that Qantas is facing? And listeners, if you haven't been following, Qantas's longtime CEO Alan Joyce quit, I believe, a month early after the airline's been accused of scheduling flights on the busy Sydney-Melbourne route they never planned to fly, basically to preserve slots. They've blocked Qatar Airways from adding flights to Australia, even though from what I understand, fares are very high. There's excess demand that Qantas can't meet. So there's some reputational issues at Qantas. Did Virgin talk about that at all?
They didn't talk about it, but it's probably the case that they are benefiting some. Now, why didn't they talk about it? Well, one, because they only issued a press release. They didn't do an earnings call. They are not a public company yet, so we won't get any earnings calls from them.
Though an IPO is expected to come sometime in the near future.
Expected. Yep. And they were thinking originally about doing it before the end of this year. I think Bloomberg reported that that's not going to be, it's not going to happen until 2024. The timing of IPO always depends on, how the markets are doing and investor sentiment and all that. So they're just kind of waiting for the right moment where they can, sell the shares for the maximum amount of money, looking like 2024. But they seem to be, in a much better shape now. They seem to be, the chief executive is actually the former chief executive of Jetstar, which is Virgin's chief enemy. Jetstar is owned by Qantas. And so, it's always a good thing when your CEO knows the enemy in and out, and that's helpful.
Yes.
So it's they're making money. That's a good sign. Now, again, Qantas, notwithstanding some of the troubles that you just spoke about, Ned, the service issues and the problems with unions and regulators and all that, notwithstanding all that, it's an extraordinarily well-run airline. And their record of success over the past 10 years or so is quite impressive. So it's Virgin is dealing with a very, very difficult rival here.
Absolutely, and the truth is the Australian market is, there's not many, like you said, there's not many places to grow. So Qantas gives up a few passengers to Virgin. We're talking a few points of share, maybe. Like Qantas is still the 100-pound gorilla in the room. There's not many places. There's not much room for passengers to switch in mass. So it's I expect Qantas will continue to do quite well. Despite their reputational issues, they continue to be quite profitable. And of course, now have a lock on at least of Australian airlines on the international market. So it's
Right,
it'll be
right.
interesting to watch.
It's still largely a duopolistic market. There's Rex, I believe it's called. They're now operating 737s on some of those routes. So I can't imagine they're doing too well. Again, Canada has the same problem. Every time a third airline gets in, it's always, they have, niche players here and there in Canada. Got Porter and have some regional airlines in Australia, but largely, a two airline market. And but as you said, it's Virgin Australia. They could run into that same problem again eventually, where they where do we grow? They do now. They're growing back into some of these short haul international markets. Think of Fiji and Bali and places you can reach. In fact, they're even flying 737s all the way to Tokyo from Cairns. I think you wrote about that, Ned.
It is widely viewed as a sort of slot squatting plan. They have some very, very limited Haneda. They have one set of limited Haneda slots. Qantas would love to get its hands on it, but in good competitive fashion, they're unwilling to give that up and to meet usage rules. They're flying a 737 MAX 8 from Cairns up to Haneda, which is one of the longest MAX routes in the world. But hey, they can do it, and that it keeps their access to Haneda there in the event that in the future they're ready to get wide bodies again and fly that themselves.
Yeah, they do have a partnership. I think it's pretty modest with All Nippon up there. Actually, also they used to have a partnership with Delta. Now they're working with United. So I think they work even with Qatar Airways. So
which I'd argue is probably much better partnership for them, because United is just a far larger airline into Australia than Delta ever was. So now United serves Brisbane, Sydney, and Melbourne, which are the three biggest cities. Of course, Brisbane is Virgin's largest hub. So having that feed's got to be some benefit. It's just a code share at this point, but definitely could grow.
Yeah, that's probably why they switched. And the only fun thing I'll say about Australia is that just stepping back and looking at the macroeconomic situation. I mean, this was an economy that went for pretty much 2 decades without a recession. Just one of the healthiest economies in the world for many years, and a lot of economists attribute that to just so much demand for its natural resources, particularly from China. There are some questions now with China no longer having a fast-growing economy, no longer voraciously consuming the world's materials and Australia's materials. Does Australia have that economic momentum going forward? It's an open question, but that's just one of many questions for Virgin Australia and Qantas as we move further into the 2020s.
Absolutely. Well, listeners, with that, we're going to take a break. We've got to dial into Delta earnings very shortly. Like I said, we'll drop a link for our Delta coverage in with the podcast notes. We'll have that journal article that Jay mentioned and also coverage of Virgin Australia. If you want to reach myself, you can email me at er@skift.com. You can reach Jay at js@skift.com. Jay, always a pleasure.
Well, likewise, Ned. And again, to all of our listeners, happy third quarter earnings season.
Thank you for joining us for this week's episode of the Airline Weekly Lounge podcast. Check out airlineweekly.com for a new issue every Monday and updates on the latest airline news throughout the week.